so much you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy, the podcast where we interrogate Trump's economic policies to see if they're helping, hurting, or just a load of hot air. My name is Kobi Tirey. I'm a Democratic media consultant, and I'm joined by my co-host, Banker Bill. Banker Bill is a much better credentialed banker than I am a political consultant, but every 2 weeks I try to get him to agree that Trump is absolutely terrible for the economy, and I'm only mostly successful. Today, we're talking about college debt. As far too many of you know, college debt repayments started earlier this month after President Trump initially paused them in March of 2020 in response to the pandemic. President Biden tried to cancel up to $420 billion of college debt, but of course the Supreme Court struck that down. I think the story of what happened next is one of the most important and untold stories of the Biden administration. He went to work to cancel as much student debt, to get rid of as much fraud and waste and mismanagement by the private lenders, and to do a thorough accounting of every single college loan payment that had been made up to that point to find errors and mistakes and other loopholes that could be leveraged in order to help out the average American student loan lender. So, Banker Bill, I want to ask you to guess, how much student loan debt did President Biden manage to forgive?
So I'll tell you that I'm cheating just a bit, because I do remember from back then, he forgave like the public service debt or some of it. So that was like 70 billion. So total, I don't know, 80, 90.
$188.8 billion to 5.3 million borrowers for an average of $35,000 alleviated per borrower. It was a really complicated process. NPR did a huge study where they found out that private lenders had not been keeping track of payments, which is really important because after 240 payments, a lot of borrowers were actually entitled to have the rest of their debt forgiven. That's one payment a month for 20 years. Basically, there were a whole bunch of mistakes happening in the system, like borrowers not being told their debt had been forgiven, or private lenders not keeping track of the payments when it was passed from company to company as that debt got bought and sold. But it was also mistakes that were being made in forgiving public debt for teachers who started those programs with the understanding that their debt would be forgiven after they worked in the public sector for a certain amount of years. I think the big question that I just want to ask you, Banker Bill, is would we all be better off if that $420 billion had been forgiven? Are we better off with the $188 billion that are circulating into our economy instead of going to paying off debt?
To your question about are we better off, the fact that the government has to forgive, Jubilee, eat, whatever word you want to use, these loans, it's an admission of a bad return on investment. And ultimately, the graduate or the person who was not able to graduate owns the loan and can't pay it off because they're not making enough money oftentimes to do so. So I think are we all better off? Probably not, because we're these are credit losses is what we're really admitting to by writing it off. Are the people better off? Yes, they owe the money, but I think you would be surprised to find how destitute many of these people who owe the money is. A lot of what's owed out there, the remaining 1.7, 1.8 trillion dollars that's out there, the average across that is like $25,000, $20,000 in debt. I mean, that's like a used car. It's not an insurmountable sum. The debt itself, the nominal amount of debt, is not really the issue. It's that the earnings or the potential earnings to pay off that debt haven't been there. And institutions, the universities, these colleges themselves, have not shared in the cost, in the risk of poor earnings outcomes. The system as it works today is one in which an institution admits you and says, hey, we like you, we want you in. By the way, you have to get somebody else or pay your way to be here. So we like you, but just not enough to pay for you to go here. And so the person, the student goes out and gets a loan from the federal government. The federal government pays the institution, and then the burden of repayment is on the student. And there's no risk, no cost share from the institution. So it would appear to me that there are some institutions, and I want to stress just some, who have basically a business model in which They take money from the federal government and offload the risk to their students. Period.
But big picture, just talking about the money flow, we grew up in the post 9/11 era where retail therapy was an important economic boost that we all had a moral obligation to go out and perform for the U.S. economy. Isn't this $188.8 billion doing just that for the American economy? Aren't we all better off if that's circulating around the retail market as opposed to just going into government or private lender coffers?
I don't know. That's subject to debate. The money is getting spent no matter what. So you forgive $180 billion. That's money that the government would have gotten and immediately would have spent. We've established that we are constantly in debt every day and that we're spending more than we take in by way of tax revenue. So as that money came in from the student to the government would just turn around and spend that money in the market elsewhere. And instead, by forgiving it, the consumer just spent that money. What they spent the money on versus the government, probably different, but it's still going into the market, the same way.
Well, we established in the deficits episode that, of course, sovereign debt is not quite the same as personal debt. So I'll take the slight win there, even if it's on a technicality. Was this inflationary during the pandemic? Was this part of the reason why it went up to 9% and Biden had all that trouble in the first place?
No, I don't think so. I think it was inflationary when the government cut the check, when the government issued the debt, when that person was in the institution. That's when it was inflationary. If somebody had $1 pre-pause, they had 50 cents going to consumer electronics and 50 cents going to the government to repay their loan. Well, we know the government is in deficit, is spending more than it brings in. So when that money came into the federal government, that money and then some went out the door into the market. And now the government probably didn't buy consumer electronics. They probably bought something else. But the point is that money still made its way into the market. When they put the pause on, the same consumer who was paying the loan had $1. And now instead of 50 cents going to consumer electronics, they spent $1 on consumer electronics. So the full dollar ultimately made its way throughout the market one way or another. Again, the initial inflation for the student loan came at the time that the government loan was distributed. You don't get to count it twice. You can't say it was inflationary at the time that the debt was issued, and you can't say it's inflationary if you put a pause on it.
What about such an unprecedented sort of turning on of debt, though? Is there going to be a negative economic impact by the fact that a whole bunch of people are going to have to start spending their income on college debt as opposed to consumer goods?
Yeah, I think it could just be a drag on certain aspects, right? So what I just told you in my example was, in aggregate, it wasn't inflationary. Now you turn it back on. The person was spending $1, let's say, on consumer electronics. Now they're going back to 50 cents. So that would create a drag versus prior periods. So you would expect some areas now of consumer spending to pull back a bit, while other areas, say, I don't know, defense contractors, government, I don't know, agencies, whatever it is, the government's got a deficit. Doesn't really matter. There may be more money for that, whatever. So it might be certain sectors that are consumer centric, consumer spending centric. You might see a decrease in that spending that's moderating versus the pause, the levels that we saw when there was a pause. One point that you just made me think of, I believe that the best allocator of capital is basically anybody but the federal government. I say that partially in jest. There's some things where I'll concede, but for the most part, right? So I can make an argument that by eating the debt eating it right now is a more efficient allocation of capital, of money in the system than having it get paid back to the government. And I would say where the error was in the issuance of the debt to begin with. That was the problem. So, in a way, I'm crying over spilt milk. But the problem in and of itself is not forgiving the debt. It was issuing the debt.
I'll take it.
You'll take what you can get on this one.
I'll take what I can get out of this one. I want to go all the way back to the beginning. I want to explore 3 narratives about the situation that we've ended up in higher ed and whether those are true or not. And the first one I want to start with is the narrative that when we made the decision, or when the decision was made for us, that our economy was going to fundamentally shift from a manufacturing economy to a service-based economy, the catch-all and be-all of economic prosperity and mobility in this country became the bachelor degree. However, that led to a country clubification of universities, in which they became more about networking and social gatherings than an education, because everybody had to go, regardless of whether academic performance was really what was going to carry them through life. Banker Bill, do you agree with that narrative, or do you think that that's overly simplistic?
I think it's overly simplistic. Look, there's more people going to college than ever before. It's in the mid 30s or high 30s. So there's still far more people not choosing not to go to college than are going to college. I think what changed over time was people going to college instead of going to work in the factory. And pulling some information from Statista, it looks like there's probably around 50% of the degrees conferred are bachelors of science, 40% are bachelors of arts, and 10% of others. So it's not like everybody's just getting, a bachelor's degree of arts. And some people want to be pejorative on what a bachelor's of arts degree means and put more weight on a bachelor's of science degree. That's fine. But I'll tell you that if that's the case, then still there's equal amounts or more people getting a Bachelor of Science degree than a Bachelor of Arts degree. Perhaps, yes, people were convinced to go to college who probably weren't a good fit for it. And as I had said, kind of hinting at the risk problem, universities were fine to take them on. Universities got paid from the federal government and then transferred all that repayment risk onto the student.
So do you think that this narrative that the lending is predatory, that basically if we're going to build our economy on the decisions of 18-year-olds, that we're sort of getting what we deserve?
I don't know that I would call it outright predatory. I would say from the research I did on the Department of Education website, the overwhelming majority of schools or institutions out there are delivering good outcomes for their students. Where I define good outcome is what are the median earnings of the graduating student versus what is the median debt of that student. But there are a number of institutions out there, as I said just a few minutes ago, where it seems their business model is to get money from the federal government, transfer all the repayment risk onto the student, and they walk away fat and happy. And whether the student does well or doesn't do well, they don't really care.
Is this big shift towards bachelor degrees, though, part of the reason why universities don't even feel like universities anymore, especially when compared to the European counterparts? It's all about dorms and sports teams as opposed to getting the best education that you can get. What do you think is driving that sort of transformation of the college to a social and cultural hub as opposed to a purely academic one?
I think you're romanticizing it a little bit, and there is some romanticism. That's how some of these things get sold. But there are plenty of schools out there that have the big sports teams that are fun to watch and maybe have a reputation as a party school or a drinking school or whatever. And nonetheless, by looking at what does that student earn, what is the debt that it took to earn that, they're delivering good outcomes. And there are likewise plenty of schools that are small and preach this intimate setting, and they're not delivering good outcomes. And vice versa. Big schools that aren't delivering good outcomes, small schools that are delivering excellent outcomes. So, and this is not about, one major versus the other. There's plenty of schools out there that are delivering a bachelor's degree in education for somebody to go be a teacher in a public school and delivering a strong outcome by looking at earnings versus debt. And likewise, there are institutions who aren't. So not the same student, but a student gets a degree in education, goes to work in this state, based on the choice of the school, even though both of those students wind up making about the same amount of money, one school is delivering that for much cheaper in terms of debt versus another. And that's really the issue. It's about the outcomes.
Would we be better off if we were doing the Pete Navarro thing and we went back to the manufacturing economy where we have 3 generations working in the same factory and nobody has to worry about college debt? They just have to worry about rent and a mortgage. Would we all be better off, or are we better off with the workforce that's as educated as it is?
Yeah. Have you noticed that Pete Navarro's been sidelined recently? Where's he at? Where's he been? What section of the White House has he been hiding in? He didn't go to Geneva last week, did he? No, he wasn't there. Anyway, no, I don't agree with that. I think, look, Americans started in the fields. We then moved into the factories. Then we moved into the offices. Now we're basically in the cloud. We have, by our systems, migrated up the value chain for the jobs and the careers that pay the most.
The second narrative that I want to explore is the one that says that millennials, our generation, are not buying homes, are not having kids because the student loan burden is weighing so heavy on us, especially within the context of graduating college during or right after the Great Recession, and then being hit by the pandemic just when we were supposed to round out into our money-making primes. Asking you that question feels really stupid, though, because, of course, when I got to know you, you were an absolute master at living on a shoestring budget in order to pay your loans back as soon as possible. And the second you did the exact same thing to get your MBA. Do you think there's anything to this narrative that student loans are holding our generation back?
Yes and no. I mean, yes, in the sense that if you have debt in one area of your life, in this case, student loan debt. Oh, and by the way, that debt can't be written off through bankruptcy or repossessed like a car could, even though the average debt out there outstanding is as much as a used car. That is debt that you've got to pay off and can't put onto something else, for example, a house or home equity. So there's debt overhang there. Notwithstanding, there's plenty of millennials like myself who paid off their debt and are doing well. And, you know, we've covered, I have a kid, not preventing me from having a kid. My housing situation, I'm not going to divulge, I don't have to, but it's my own choosing, or I should say, choose a partnership of choosing between me, my wife and I, lest I say anything else on that. But I think that's a trope too. You know, millennials were burdened with debt and they couldn't do this and they were lazy. And now fast forward to the millennials and their earnings years, and so many of them are doing well. But it's become a bit of a barbell.
It's also kind of weird because, of course, the payments were supposed to be turned on in November of 2023 as part of a budget deal. Biden just never decided to follow through on that.
Why? Do you remember why? I mean, at that point, we're all back to work. You know, unemployment's, I don't even know what it was, comfortably below 5%. Was it just purely political?
I mean, this was one of Biden's tentpole policies, and it was the one that he didn't get through.
But how can you say it's tentpole, and maybe your definition of tentpole is different? How's it different? How you say it's tentpole when, you know, this is 40 million borrowers, 40 million people with a loan out of 230 million adults. It's not even 20%.
Political issues are not measured in terms of how many Americans they affect. We're talking about trans women in sports right now, and the NCAA has already established that's less than 1,000 people. You know, but if you look at the number of borrowers that Biden was able to help versus the total number, he was able to alleviate or forgive some debt for 5.3 million borrowers. That's what, an eighth of the total number of borrowers in the country?
So as of now, there's like 40 odd million. So at the time, that would have been, let's call it 45. So he dropped the ninth. Call it 9%, 10%. Okay.
So, you know, and that was with the Republican Congress, that was with the Republican Supreme Court, you know, stymieing him at every level. And look, that 188 billion is also not safe. There is another court case right now that could put a lot of those savings in jeopardy. It was interesting, though, when I was sort of trying to figure out what the political viability of this issue is. And it's hard to tell, right? Because on the one hand, debt forgiveness, how could that be politically unpopular? But of course, so many people have made so many sacrifices to pay their college loans back. And there are a lot of folks, as you pointed out, that don't have college loans to pay back in the first place, or have small college loans that they had no problems paying off because it only supplemented their total tuition. There were some polls, they were interesting. They mostly said that young people really liked it. However, when I dug into the numbers, sure, they liked college debt forgiveness. They were voting for college debt forgiveness, but not at the same levels than gun control even, or immigration, or national security, or democracy, or reproductive rights. The only issues that it seemed to beat were climate change and marijuana legalization.
So let me ask you this. So why then did Democrats and Biden back then pick this up, as you said, as one of their tentpole strategies or policies, when the highest concentrations of student loan delinquency are in Oklahoma, Arkansas, Louisiana, Mississippi, Alabama, Kentucky, and West Virginia, none of which a Democrat has won since what, Clinton, 92, 96?
And those are states that across the board
constantly, they're always the ones.
But they're always the ones who get the majority of federal dollars per capita.
Don't get me started on that. And yet, in this case, what I'm asking you is, why did Democrats basically pander to them?
The greatest predictor of whether somebody votes or not is their education level. If you look at the 2022 midterms, though, if you look at the Senate races, those candidates who embraced debt forgiveness versus those who opposed it, even from within the Democratic Party, I'd say the folks who embraced it probably did a little better. Kelly in Arizona and Warnock in Georgia In the Midwest, you had Duckworth and Wyden won, Hassan won, Bennett won, Blumenthal won. They all embraced it. In Ohio, Tim Ryan lost to J.D. Vance, of all people, because he opposed it. Maybe we would have been rid of J.D. Vance if Tim Ryan had just gotten with the program on that one. Val Demings and Rubio, she got crushed. She also opposed it. There are 3 exceptions. Masto in Nevada, she opposed it, and she won a very narrow reelection. It did not seem to help Beasley in North Carolina. And Mandela Barnes, he really supported it, and he still lost by 1 point. You can celebrate a Jubilee as much as you want, but at the end of the day, it doesn't matter how much college debt is forgiven. It matters how much bad college debt is not going to be issued moving forward. When I was doing research for this episode, I came across a really interesting new way of paying for college that Purdue is experimenting with. They will basically buy stock. They will get a percentage of your earnings for 10 years after you graduate in exchange for up to $50,000 in tuition money. The NPR story I was listening to about it was talking to a girl who wanted to graduate as a food scientist. She had to pay 15% of her income. An English major is actually going to have to pay a lot more than that, because what the college is trying to do is they want everybody who's entering in this program to essentially pay the same, and they have the average earnings for each major. So if you're in a lower paying major, you're going to pay a higher percent. And explicitly, they are doing that to try to encourage folks to be smarter about what majors they're taking. Is that a plan that you think should be adopted far and wide moving forward? Is the solution here really on the college level as opposed to the government level?
I love that. I love that. That's the university, the institution. They're saying, "Hey, we believe in you. We think you can make this work. Here's how much it's actually going to cost you. You make the decision. We'll help you make the decision. We have the data. We did the research. We've got the calculations. We'd love to have you, but here's how much it's going to cost." That's a way that to kind of instill some level of market dynamics into it. But it's interesting. So in that research that you found out, I found out, while I love this, what you just told me, this kind of policy, Purdue University Global, which is their online offering, has outcomes that are comfortably below the national average. So I told you that across all institutions nationwide, it's 2.9 median income to median debt. So all the institutions, the median income 10 years after graduation versus the median debt at graduation is 2.9 to 1. Now, I think on its face, that's good return on investment. Purdue University Global, for which they have 31,502 undergraduates, according to the Department of Education, the ratio is only 1.4 to 1. And earnings 10 years out, median earnings 10 years out from a Purdue University Global degree are $37,000 versus a debt load of $26,000. Compare that with Purdue University main campus, the one in West Lafayette, where it's 3.7 to 1, comfortably above the national average for 39,000 undergraduates, making a median of $72,000 a year, median debt of $19,500. I threw a lot of numbers at you. The takeaway is this: Purdue University Global program is a diploma factory and serves to profit. And serves to profit by taking money from the federal government into its coffers and sending the student off on their way to pay it back. Or otherwise to subsidize those students at Purdue University main campus. I don't see how you can come away with any other inference. So while I applaud them for taking on what they're doing and assigning some metrics to it, are they going to do that for their ostensibly cash cow online program?
Let me ask you a question that neither one of us is qualified to answer, but I would appreciate your take. Those folks that are going to Purdue Global, should they be getting a bachelor's degree from a more ethical program with more ethical lending, or should they be doing something else? Should they be getting an associate's degree? Should they be going to trade school?
I'll answer it a different way. Chances are, based on the Department of Education data that's publicly available for everybody, they could do a hell of a lot better making more money with less debt than Purdue University online, Purdue University Global.
I guess the question that I'm trying to ask you, at the end of the day, is the problem bad loans or too many loans?
Bad loans or too many loans? That's interesting. Let's take it this way. Universities improve outcomes. The debt stays constant. Outcomes are improved. median incomes rise. At what level of outcomes improving do we reach an upper limit of those higher earning jobs start to get diluted by just having more quality labor in them, right? So labor for those roles is increasing, which reduces or plateaus the earnings for those roles. There's got to be some kind of upper limit. I don't know where it is. That's one side. The other side is bad loans. So what is the opportunity cost of the student doing something else? And I would say, based on the Department of Education data, they could do the same thing or something different for potentially less income, but substantially less debt, such that that income to debt ratio is much improved and it doesn't feel like an overhang. If you got $20,000 in debt, Kobe, and you're making $150,000 a year, you don't have that big of a problem. I'll scale that down. If you have $5,000 in debt and you're making $55,000 a year, that's not that bad either. So again, I'm coming back to it. It's not about the nominal figure of debt that's outstanding. It's really about the outcome. So if we can drive the better outcomes, assuming we don't immediately reach some upper limit of now having this increase of qualified labor in the workforce, that's really what I'm striving for.
Well, I'm really glad you said that, because the last place that I wanted to go was the old Democratic narrative on this, the Barack Obama, Hillary Clinton narrative on this. Barack Obama leaned more on the community colleges, on the 2-year degree. Hillary Clinton at one point was telling everybody that they needed to learn how to code. And then, of course, the response is that minors don't want to code. I think that if we had taken her advice at that point and gotten everybody into coding, the current job market, the vibe coding revolution would have cut the gains of that pretty quickly. But do you think that the community college part of that was a good idea? Would we be better off if some of these folks going to places like Purdue Global were going to community colleges and getting associate's degrees instead?
It is an error among Democrats of the back then to do and say what Hillary Clinton did, because there are 2/3 of people who aren't going on to college and are looking to do something else. They're not sitting at home on their hands doing nothing.
She was saying that instead of going to college, you should learn how to code in a program that's a lot cheaper and a lot shorter than a 4-year bachelor's degree.
Okay, as an alternative.
Did she phrase it horribly?
Yeah,
yes,
okay.
But that was the point she was trying to make.
And then, like you said, 10 years on, however many years on that was, that job is now in part at risk and was seen as bulletproof, right? More evidence of the worker evolving, again, from the fields all the way to now the cloud. But to answer your direct question, the data shows the 2+2 is a great deal. I personally knew people back in college that did that. I didn't. I knew people that they went to public school and private school. So they did the 2-year program in the same county or like a border county, associate's degree there. And then they transferred to a private school or public school. I know one of them went to actually George Washington University and now has a very prestigious career. The data kind of shows the same thing. So nationwide, again, 2.93 median earnings 10 years from graduation times debt at graduation. For community colleges, 3.85. So it's almost a full turn better. So I mean, the proof is in the pudding for those schools. They're delivering. I guess what? They're almost fully state funded, right, by the local state. I mean, the return on investment's obviously there for those schools.
I think the 2 and 2 makes a whole lot of sense, both from a do I really need this degree to make money standpoint, but also from a let's defer some of the weight of this decision from 18-year-olds to 20-year-olds. Doesn't that make a little bit more sense for everybody?
Yeah, but then you can't go to the big football game on Saturday, which I say because I was one of those people going to that big football game. But hey, I paid for it. I had $30,000 in debt when I graduated undergrad. I had another $50,000 or so, $60,000 and so in debt from my grad program. And fortunate for me, I made it work for me. And the outcome I had was good. The earnings outcome I had was good. So I was able to service and pay the debt off. right? And I want to see that for all the students, regardless of where they choose to go. I just want a mechanism where the students are better served to achieve an outcome for debt, right? When you take out debt to pay for something, it's two things. One, it's the opportunity cost of could you have done something else? And two, the cost of the debt. You actually have to pay it back. So, I would advocate for something like what we have for small business administration loans, where someone goes to a bank and they say they want to apply for a small business loan through the Small Business Administration, and they jump through all those hoops with the SBA, and then the lender, the bank, gives them the loan. And what happens is, as long as they jump through all the hoops and everything, if the person defaults on that loan, the bank goes after the borrower first. If nothing else can be gained from the borrower, the bank can get 20% of the original loan back from the government. So in this way with the SBA loans, right, the process, the framework that we already have in place today, you have three parties sharing in the risk. You have the borrower, the bank, and the government. Today, in higher education, we have only two of the three parties sharing in the risk. That's a problem.
So at the end of the day, let me ask you, is Trump turning the payments back on bad for the economy?
No, I don't think it's bad for the economy. And I think if we want to see change in student loans, then we need to pursue a change in how we administer them going forward. There's externalities and trade-offs to all of these. Any proposal will have them. I think just blanketly forgiving student loans altogether would probably be a net negative for the economy, because it would be yet another demonstrable instance of the United States not taking any kind of debt burden seriously. And if you did instead forgive the debt, but also signal that you're preventing that reoccurrence, maybe they net out, right, to even, where one's better for your economy going forward because you're fixing the problem, but at the same time, on the backward-looking stuff, you're writing it off. But just writing the stuff off as a giveaway or as forgiveness without addressing the problems that got you to that spot, no, I think that would be demonstrably bad. That's a poor outcome, I think, for everybody, except the institutions. Definitely not a bad outcome for them.
Well, I completely agree that we need a holistic solution here. We need a comprehensive strategy, and we absolutely need to get at the root of the problem and not just the symptoms. But the idea that forgiving college debt would at all diminish our economic standing on the international market strikes me as insane, when the federal government is already in the habit of forgiving debt, especially to businesses. And they forgave so many of the payroll loans that were made during the pandemic as well.
Hey, I'm not going to get an argument from me on that one.
All right.
I don't think forgiving those was good policy either. What was the cost? Not to separate it, but what was the PP loan cost to the government?
I don't know. I think you probably have to ask Brett Favre. I'm just glad that we made it through this conversation without bringing the word fair or fairness up once.
Not about fairness.
Plenty of people are having that conversation. I think it's an important conversation. I think people's feelings about fairness in this issue absolutely matter. But that's a different podcast. This is the podcast where we ask, is it bad for the economy? And we're so happy that you decided to spend another half an hour with us exploring that question. Check out isitbadfortheeconomy.com. Share it with your family and friends. We're on Spotify. We're on Apple. We're on all of your favorite podcasting platforms, and we appreciate nothing else in those 5-star reviews and those comments on Spotify. Thank you so much for joining us. I think Banker Bill had one last thought before we sign off.
Yeah, real quick, because you dropped the bombshell. Okay, it was about $800 billion. I don't know how much they forgave.
They forgave 92%.
Dude, there was so much fraud in there. Unbelievable.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time